Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. As you can see, I made it back from the Big Easy safe and sound. Had a great time. Recommend it, but holy cow, is it crazy. As you see on your screen, each and every week we show you the stocks that'll be featured in this week's video. And as a reminder, if there's a particular stock you're interested in, you can go directly to it using the chapters feature in the recording. All right, with that, let's take a look at the charts. Lots to talk about this week. You can see on the S&P, we did move back and fill the gap. More on that in a moment. We did have some economic news that came out this week, both the CPI and the PPI report showing inflation is hanging in there. The headline number might have confused people with the fact that on the CPI, it was at 3.1 when it was at 3.4 in December, but 2.9 was expected. And when you look behind the scenes, food, shelter, some other things actually ticked to the upside. So that created a downward move that occurred on Tuesday. And we talked about that in this week's TradeFinder on Tuesday night. And by the way, if you haven't registered for TradeFinder, you can do so with the link that you see on your screen now. We do it every Tuesday night at 9 p.m. Eastern Time. It's free. We talk the markets. We look for trade ideas. And we have a live Q&A at the end. We have a great community. Love to have you join us in this coming week's TradeFinder. All right, back to the chart for this upcoming week. After filling that gap, we have some big news on the agenda. As a reminder, Monday is a holiday. The market is closed for President's Day, so we don't trade again until Tuesday. But it'll be a busy week with NVIDIA's earnings coming out next week, as well as the Fed minutes. So there's going to be a lot of attention paid to what the discussions were behind the scenes, especially now that we have these hotter than expected reports. Obviously, the minutes were out before that, but we'll want to know what the Fed governors were talking about, the voting members of the FMC, before we saw that data. We get the PCE report that the Fed loves at the end of the month. We'll be talking about that when it comes out. So I think this whole higher for longer thing is going to be here for a while. Right now, we have June being priced in for the first potential rate cut. Remember, I talked about I didn't really think that the whole March thing was ever going to play out. Obviously, that hasn't. And now we're looking at June, maybe. So more to see. All right, so back to the S&P chart. So there was the gap down that occurred on Tuesday. And then we had a doji, and that was kind of a signal that maybe there wasn't going to be follow through. We weren't sure. We've moved back to the upside, but so far, all we've done is fill that gap. You know how I feel about gaps. Gaps get filled. So we filled that gap. We couldn't take out that wave 3 high today. I'm going to need to see that before I feel like maybe this wave 3 isn't done. I think it's still open for discussion. Perhaps having a holiday weekend created a little bit of position squaring going into the close. We kind of sold off, as you can see, closing on the low of the day today near the close. But we're right at that 500 level that we had talked about a few weeks back. So we hit that. We're right on it. We look at the 10-day moving average, and you can see that even closing on the low, we're still above the 10-day moving average. But I really think we need to see a break above this wave 3 high that occurred back on the 12th of February with a follow-through day. And then perhaps we can start talking about 520. But for now, I'm not fully convinced that we don't correct a little bit more. Maybe we just kind of churn a bit until we get that PCE report, but certainly took a little bit of wind out of the sails with that hotter than expected inflationary report. Taking a look at the 10-year, the interest rates for the 10-year, you can see that we moved big to the upside on Tuesday as expected, and then we had come back down, but then back up today as the PPI report backed up the CPI report, both showing a little bit higher than expected inflation. So we're right at a 45% retracement here on the wave 4. Remember back when we had this wave 5 up around 52, and I was saying I didn't really see the catalyst for rates to go that high. Well, now that we're in a 5 wave to the downside pattern, I don't see the catalyst to move rates that low either. We're already pricing in the first potential rate cut to be June. And depending on that PCE report, that could even get pushed out further. So I don't know that we're going to see rates down that far that fast, but we'll see how the economic data plays out. Looking at the dollar had moved up. That was a little bit worrisome, but it's backed off a bit. It was flat today, so we're right in this exact same spot here at 104. But we don't want that dollar to get too high. Remember that if the dollar gets too strong, it hurts earnings for international companies, and it's such an international economy that we have now, global economy, from the exchange rate, et cetera. So it's getting a little worrisome high for me. We're at a 68% wave 4, getting close to disqualifying this 5-wave pattern. And, we just keep moving up to with the dollar, even with all the debt that we're issuing. Rick Santelli on CNBC did a great speech last week on just shaking his head on the amount of debt that we're issuing. But as long as people have faith in the dollar, et cetera, we're going to get away with it. But at some point in time, you'd have to think that the debt level is going to come back to haunt us, but it's not now. Looking at the VIX, big spike up as you would have expected on Tuesday, but we closed way off the high. We hit the high at 18, but closed below 16. Now we're back down around 14, ticked up just a bit right into the close to close just above 14 on the VIX, but we're back down in this lower end of the range. Not low enough that we're talking about, are we going to break 12 or 13? And perhaps we do move back to the upside. I think next week's going to be interesting, and it's just a toss of a coin, I think, as far as where we go next week in the market. It's going to be really interesting to see how that plays out. Looking at the rest of the markets, these charts are going to look all similar. The Dow, same thing, filled the gap, but nothing too exciting today. In fact, an inside day today. And that means that the high of the day was lower than the high yesterday, and the low of the day was higher than the low yesterday. Sometimes an inside day or an outside day means a change of direction. Not always, but in general terms, that's something that's watched for. We look at the 10-day moving average, and we hit that on the low, but really a small volatility day here on the DIA. Looking at the Qs, that would be interesting with the movements back and forth on rates, and it kind of as expected as well, filling that gap, not really getting anywhere near that wave 5 high. Remember, we have still a wave 3 in the Dow and the S&P, but a wave 5 in the Qs. At one point, those are all going to come into concert. Now, if we do move back up next week and break above that 440 level, perhaps this 5 on the Qs relabels to a 3. But too soon to tell. We look at the 10-day moving average here on the Qs, and we traded below it but closed above it. So it's all no harm, no foul going into the holiday weekend, but it is going to set up for, as I said, a really interesting shortened week with NVIDIA and the Fed minutes next week. Looking at the IWM, and that one was pretty wild with the run up. And then yesterday, we're wondering, are we going to go up and hit that 210 level? Well, it backed off today. Also an inside day on the IWM, holding above 200 at least. You look at the 10-day moving average, and interestingly enough, the best separation from the 10-day moving average, at least to the upside, is on the IWM. So is that a sign that, hey, the market is still okay with taking risk? If you're one of those that believe that the small caps are a good indicator of risk on, risk off, staying above 200, I think, is key. That's where that wave 5 was back in August. Perhaps we do run up and test that 210 level, which was resistance going way back. But we still have that wave 3 high to get above before we can do that. So maybe we don't make it to the 210 level. Taking a look at some stocks of interest. The USO, I forgot that one last weekend. Y'all reminded me of it. Apologize for that. We're starting to catch a little bit of a bid here in oil. Nothing too significant, but we are kind of in a bit of a trend to the upside, just an old basic trend with higher highs and higher lows. So that, with a higher inflation, not what we want to see. We don't want to see higher prices at the gas pump. We already know that the January retail sales were horrible, so the consumer spent into the holiday season and then backed off in January. So if we have less discretionary income because we're paying higher gas prices, that's not going to be helpful to the economy. So we're a little wobbly here at this point, I think. Other stocks that y'all asked for, and by the way, just as a reminder, each and every month this year, we're going to give away one of our L3, we call that the level 3 subscriptions. That's to our 3 primary portfolios, the impulse, volatility, and time strategy. So that's directional, breakouts, and sideways that are AI infused. and it's worth thousands of dollars. And all you have to do to qualify is leave a comment under the video. I read all of the comments, and thanks for all the well wishes at Mardi Gras. I was safe, as you can tell, but I do appreciate all those comments. So just leave a comment regarding the markets, whatever you want, and that qualifies you for this month's drawing. And I do look at the stocks that y'all asked for. Palantir was one of them. So here we go with the chart here. They mentioned the magic words on their earnings of AI, and off we went to the upside. So we've consolidated that move so far. You know, I don't like vertical moves because oftentimes they come back down, but so far just a nice consolidation. We're still a little bit overbought, even closing on the low today as far as the separation from the 10-day moving average. So I would think if you're long Palantir, as long as we stay above this level here at 21, you can stay long there. And I know that's kind of a ways down. That would be a little bit of a hit if we move down that far, but that's where the support is. And that's what happens when you have these vertical moves. Let's at least let the 10-day moving average catch up, whether or not we just consolidate sideways and let the 10-day moving average catch up, or if we pull back a little bit more early in next week. But perhaps there's still going to be a bid underneath Palantir with the whole AI mention, et cetera. I just think right now it's just that overbought. The XLU you ask about, boy, we haven't looked at that one in a while. The utilities ETF, it's not in a 5-wave pattern at all. So these are all corrective moves, just zigging, zagging to the downside here. You can see all these zigzags moving lower. You would think this is kind of an area to hide in if people think that the market is going to slow down just a little bit. That's a place where money rotates when we have kind of a weaker economy. And then there's another zigzag right there, but look at that main one, right at a 61.8% B-wave correction. You expect 100% extension. That's where we went. We then retraced to the previous fib level, all classic Elliott wave Fibonacci stuff right here, and then back down to test the 100% extension and went between the two. So right now, you would want to see either the XLU get above that 61.8% level to indicate that perhaps the XLU is going to go higher, or break below that 100% extension for an expectation that we're going to go down to the 161.8% level. So we're kind of in a wait and see mode there on the XLU. Nope, we didn't forget Bitcoin. Bitcoin, as you can see, has gone vertical. We're trading right around 52,000 at the time of this recording. And the expectations are that we're going much higher from here. We talked about this on the Hub Financial, the live show that we do each and every Friday at 2 p.m. If you haven't done so, go over to the Hub Financial channel here on YouTube and register there, subscribe, and you can be involved in the live show each and every week. And we talk a lot about cryptos there. But this move to the upside, you can see, has hit the 61.8% fib level. Maybe we consolidate here for a little bit on Bitcoin, but the expectation is that we're not done there. We're off and running. You can see a little separation there from the 10-day moving average, not too much, but maybe just a little sideways stuff over the weekend here before the next move. And Coinbase, we marry those two together, as you know, and look at that move. It had an upgrade, although it was an upgrade from sell to neutral. So it wasn't a buy. And then the earnings report came out with a surprise beat on earnings, and there we go, vertical to the upside. I wish it wouldn't have been so vertical. There's big separation here from where we're trading in the 10-day moving average, so maybe we need to just calm down a little bit on Coinbase. So that would kind of coincide, as I said, if Bitcoin kind of goes sideways a bit for a couple days, maybe that allows the 10-day moving average to catch up here. The key is that we're right above this wave 3 high. We broke above it. We need a follow through day. You know the rules. You need a follow through or confirmation day. But we might not be done with Coinbase. With the behind the scenes stuff, I know there was some concern back in here when we had the downward move that maybe with the new Bitcoin ETFs, et cetera, that there wouldn't be as much trading on Coinbase. But obviously from their earnings report, there's a lot of trading going on Coinbase. So let's let that overbought condition settle itself out. But then I think there's more upside to go on Coinbase. Tesla, I thought I would leave that one in there and show you because we said it needed to hold 180, and it did. So that 180 level was key. It had to hold it. It did. We bounced to the upside, but all we've done now is go up and fill that gap. So is that enough for Tesla to continue back to the upside. We've got to get above this 200 level. And I would submit, I always try to give an aggressive and a conservative stance because we all have different risk tolerances. The more conservative play would be let it get back above 220. You can see that was where we were at the low back in August. And then it's been kind of support resistance since then. So an aggressive move is if we can have some follow through above 200. If you're more conservative, let it get above 220. All right, moving on to GLD. Gold, we had the triangle here in gold and it broke out and it broke to the downside and then it's kind of come back a little bit. Now there's three different things that can happen when you have a triangle. It can break off and run, or it can break off, come back and test the breakout, or it can give you a false breakout and move the other direction. So are we coming back up here just to test the breakout on GLD and we're going to head back to the downside, or was this a false breakout and we're going to go higher? We'll find that out next week when we see more information on gold. But again, filled the gap. That may be all the bounce that we get, and we look to head lower on GLD. But you wonder if there can be much of a bid. One of the things that we talked about as well on the live show on the Hub Financial channel today was the fact that according to the data, money is moving out of the GLD ETFs and moving into the new Bitcoin ETFs. So that could be a challenge for the GLD, not necessarily gold itself, but the GLD at least, the ETF, if funds are leaving. And last but not least, we can't end without showing the INDA. Boy, we talked about this Tuesday night during TradeFinder as well. Is that going to be the end of the move? It said it needed to hold 50, if not 50. There was some good support at 49. So there was a nice little corridor of support here between 49 and 50. Well, it didn't even make it down to 49. It held 50, and back we go to the upside. It's the market that just keeps on going. As I've said before, if you're looking for a place globally to put your money, I think you can do worse than the INDA. The fact that there's people out there saying, hey, be cautious of the INDA, it's priced for perfection. Maybe that's just enough doubt to allow it to move up. Remember, when everybody views the market one way, it tends to go the other way. But if you have some consenting views, then that could be just enough fuel to keep this rally going in the INDA. So lots to think about over the holiday weekend. Enjoy it. And we'll look forward to talking to you again next week. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.